All right, we are back with Eric McGlothan, CPA, tax professional, tax planner. He's helping us with these Docs Outside the Box tax series, helping us to retain more of our money, particularly for us who are going into side hustles, going into independent contracting, or just want to just reduce our tax burden. Eric, what's good? How you doing?
I'm good, man. How you doing, Dr. Doggo?
I'm doing good. Listen, we are on a roll. People are loving this. We are saving people tons of money. Let's jump into our next tax tip.
Sure.
All right, listen. I'm in my little office right here. Right above me is my home, actually, but down here is the podcast studio. And obviously, this counts as my home office. Let's clarify the whole options or the whole thing that's related to home office deduction. Tell us about it. How do you calculate it? And tell us specifically what it does for your taxes.
Sure. So let's talk about the home office. So the home office basically is the place in your home, right, where you're designated to do your business, meet with clients, do the actual business that generates money, right? So you either can designate a full space in your home, or you can even designate, believe it or not, a corner of the space as a home office.
What
But
do you
here's
mean?
what you should know. Well, you could take half of that and say half of that room that you're in is your home office. Maybe the other half is personal living space. So that's what I'm saying. So, like
Oh,
in the
now I see
dining
where you're going with
room,
this.
yes, you may set a desk in the corner of your dining room, and
My
that becomes
refrigerator is
your
my
home
office,
office.
Eric. My refrigerator is my office. All
Not
right.
right. What up,
I spend
right?
most of my time there.
Right. No, but it has to be what where you're doing the stuff that generates the revenue for the business. But what you want
Okay.
to know is this is an important point here. Prior to 2017, in the Tax Cuts and Jobs Act, the Trump tax cuts, you could write off your home office if you were a W 2 employee. So that was big, right? And would have been helpful during the pandemic.
You said
But
prior?
prior to, yes,
Okay.
prior to 2017. But after 2017 and the Tax Cuts and Jobs Act or the Trump tax plan was implemented, right? Which gave all these great benefits for businesses. That's why I'm not mad at it necessarily. But the point being is certain things went away. And one of the big things that went away was a home office deduction for W 2 employees. So
Mm.
therefore, those that work from home, right, are not able to get a deduction for their home office. So they're losing if they're a W 2 employee and do not work for themselves. But let me flip this around now. So this is why you talk about the side hustle, right? So
Hmm.
having another business, right, or having a business now creates an opportunity for you to be able to take a home office deduction because you could
Mm. I
set
see
up a
what you're saying.
business and use that same space where you're doing your 9 to 5 job and say, this is also where I'm running my business from.
And just to
And that's how
clarify,
you
you
get the write off.
technically, just to be clear, like we talked about in the previous tip, you can be starting a new business, but you don't necessarily have to be an entity to get that business deduction.
That is exactly correct. You don't have to have an
Got you.
LLC. You don't have to have an Inc. You can just say, hey, one day I'm just going to start my business. I'm starting my own podcast, and this is my office. And
Okay.
that's it.
All right. Keep
that's
going.
that's all it
We're
takes.
listening.
So
I love it.
so
I
good.
love
So
it.
so that said, right? That said, if you're going to do that method, right, then what the IRS allows you to do is either based on the number of rooms or based on the square footage. So if you have 10 rooms and one of them is your office, 1/10 of your home expenses, you can basically get a deduction for related to the home office. If you use square footage, let's say your house is 3,000 square feet and 500 square feet is the square foot of the office, you can take basically was that 1/6 of your home office expenses you could take. And what do those home office expenses include, for example? If you're renting, that means you could take, in my examples, 1/10 or 1/6
Okay. You didn't.
of that
Okay.
rent.
Wait, like, let's be clear. Because I thought when you were mentioning, I thought, oh, you're going to talk about paper. You're going to talk about like ink cartridge. For real. Like, you mean rent? Like, so if I'm currently we rent, right? We're
Yes,
renting this house.
yes.
A portion of that could be paid for by the business.
Well, it's a portion of it is a deduction. A
Got you.
portion of it is a deduction on the return. Same for, in this example, utilities, electric,
Hmm.
gas, water, security, pest control, lawn care, if you have to have a lawn care, a housekeeper, if you have a housekeeper, that includes cleaning your office.
What?
Yeah, it's a long list of things that you can claim for that home office. And that's why it can be such a juicy deduction. And that's why it's such a losing one for people who are in W 2. But if you create a business, right, then you have a Schedule C, and then you'll be able to claim a home office as long as you have revenue through that business. Because a home office on the Schedule C, it's limited. So if you don't have any revenue in your business, then there's no deduction to take. But if you have revenue, then you can take the home office deduction. Now, let me throw out another thing, though, because this is really important to know is if you are not a Schedule C business, meaning your LLC doesn't show up on a Schedule C, but you're an S Corp or a C Corp, then we have to do something different than claim the traditional home office. Because again, remember I told you that went away on the Schedule A is where it would be claimed with the Tax Cuts and Jobs Act. So now what we have to do is what we do at our firm is we create a lease agreement between the business and the individual. And what this does is the business pays the individual rent just like they would any other office place. And then we claim the home office unlike the Schedule E. We claim it and we take the same thing. So we'll say, Dr. Darko LLC is going to pay Dr. Darko, $1,000 a month to rent his office. And then off that $1,000, we deduct a portion of utilities, we deduct a portion of the rent and so forth down the line. But the goal is, and the reason why we do that is from a high level perspective, it's another way to get cash out of your business into your pockets without being subject to Social Security and Medicare taxes. Because remember, we talked about W-2 income is the highest tax income. So if you can get income in other ways, i.e. a business, i.e. rental income, i.e. the stock market, those are more tax favored than W-2 income. So if you're renting your office, if your business is renting your office from you, then that becomes a way to get income to you that's not subject to Social Security and Medicare.
Damn, now I'm like,
I know
dang.
I get a lot of ways of that.
No, this is good. This is really good. So, okay, now I have a question then. So, how do you determine, is this based off of a percentage, of how much you're using your home for business? How do you determine it? How is that calculated as the next step? And then we'll get into what this does specifically for your taxes also, because I like where we're going.
So the home office is determined based upon the area that you set aside exclusively for the business. So it's less about how much you use it personally versus individually. It's based more upon
is it square footage?
Area, right? Square footage or the number of rooms.
So length times width, and then kind of divided by the entire square footage of the entire house. I get it.
That's correct.
And then that percentage is applied to utilities, housekeeping, all of these different things.
That's correct.
Okay, so so what does that do so I know it possible to decrease your taxes, right?
That is correct.
Explain to us again, what does that do for you again? Help us one last time understand that.
Okay, so it decreases. So if let me see if I can give real simple numbers on this regular home office deduction. So let's just say, your rent is, like I said, let's say the rent for your place where you live at is $1,000 a month. So if the home office is based on rooms 1/10, that means you get to deduct $100. Utilities are $2,000. I don't know. So it's $200, and it goes down like that. Each of those numbers reduces your taxable income. So if my income is $10,000 on my tax return, I get to deduct $100 for the rental of my house and so forth down the line. So that's what we're talking about. When we're talking about deductions, we're talking about reductions to income. That's the way you need to think about it. It's not one for one necessarily. So it's not reducing your taxes by $100 or $1,000. It's reducing the taxable income by the amount of the expense.
So basically your exposure to what can be taxed by the government, basically.
That is correct. The amount of income that is taxed by the government is reduced.
We love it. We love it. Listen, Eric, if people want to ask you questions about this tip or any of the other tips, how do they get in touch with you?
Go to my website, ericmcglothanllc.com. All of my information is there. You can make an appointment, find out more information about me, or call my office at 404-946-1855.
And folks, don't forget, this is for entertainment purposes only. Don't come for us in these streets if you get in trouble. Please get in touch and confirm with your tax professional before moving forward with this information. Listen, Eric, we will catch you on the next tip, guys. We'll check you all on the next one.